Thanks for joining. Thanks for Finance Magnets for having me. So today we're going to be talking about taking stock of picking stocks. Now, this has been quite an important topic if whether you're an investor or a trader. And that is because obviously this year we've had a lot of uncertainty. So the first thing, let me just see. So we've had a lot of, as I said, we've had a lot of uncertainty. And at times like this, it becomes really, really important to rebalance portfolio. Now, if we look, what are the main contributors? I think we would know that the two largest economies, there have been trade wars, and that has been between China and the United States. Now, why is this relevant for Africa? Well, firstly, these are our two largest trading partners, primarily China and then the United States. So it does impact the stock portfolio. And if we look at, because there's limited amount of time, I'm going to focus primarily on the JSE top 40 because these are the largest companies in South Africa. And we can see that if we look at the JSE top 40, the performance has still been relatively good, despite the fact that we've had a lot of economic turmoil. And this hasn't only been this year, it's been for the past few years. So if we look, and okay, so this has been mainly because, like, for my own, to actually, firstly, to show what the global themes were in 2024. So it's not only because of this year, it's also been from last year and it's filtered through. So what we've had is last year we had the biggest political, sorry, can everyone see? Or am I in the way? Okay, so last year we had the biggest election. Basically, we had the most elections in history with 70 countries basically holding elections. This isn't only presidential, but it's regional and so forth. And this is important because there's changes in policies. And as an emerging market currency and country, well, the whole of Africa, it is important because, as I said, these dynamics impact us directly. If we move on and we look at the global themes, I'm just going to leave it here so you guys can see. So not only do we see these changes, we also saw, so we've seen a lot of ping pong with tariffs, and this continues to drive volatility, which once again drives stocks. So if you're looking at a longer term perspective and you're looking at investments, we need to take this into account. So currently, it goes beyond, while picking stocks goes beyond just looking at company valuations, because these are important factors to consider if we're looking at the long term growth trajectory of any investments and any stocks. Now, if we look at some of the global themes, so we saw a lot of, well, basically, in his first day of office, Trump cut funding to Africa and he cut a lot of other initiatives. So, this is going to impact us as a country as well, especially because we are heavily reliant in, for a lot of countries on US funding initiatives. Okay, so these are some of Trump's Africa policies. And as I said, we're going to look in the upcoming slides of why this is important to stocks. Okay, so if we, once again, as I said, even though the African economy has been under pressure, we can see that the JSE has still been outperforming. And it is still really, really high at the moment. I think, if I'm not mistaken, last year, the results came in, there was about a over 15% growth in the JSE 40. So if you had just invested in the actual benchmark rate, or if you had invested in the index, you would still be up and you would still be higher than inflation. So you would still have a positive return. So now let's look. If we have to look at why the geopolitics are important, we can see the average stock returns by industry, and we can see that there has been a shift. Mining, because we had, for South Africa particularly, we had load shedding and quite a bit of it last year, and this had an impact on the mining sector. If we look this year, we have seen a shift. And this has been really supportive, especially for gold mining companies. Now, in contrast, oil companies such as Glencore, if we look at their last quarterly results, it was a different scenario. So even though the company, while them and Sasol outperformed last year, this year they're really, really under pressure. So if we take these factors into consideration, where do you actually put your money in 2025? Which companies do you invest in for alpha returns, or just even to protect yourselves from all these geopolitics and the risks that we are facing, not only for Africa, but as a global, just globally? Okay, so once again, just looking, energy sector has underperformed, healthcare, and this was for the prior quarter, so this is Q1. Now we need to also realize this was before Trump's Liberation Day, which increased tariffs. This was before the tariffs were imposed on the pharmaceutical companies such as Aspen, and this was also Aspen was a really strong company, and even in Q1, it did outperform. But now, with those tariffs, we see that this quarter, it is underperforming. Okay, so and we have seen a shift, as I said, which also displays or illustrates the broader geopolitical risks. And this places a lot of emphasis on the next quarter results for companies as a whole. Okay, so we've just got, once again, what is driving markets at the moment. Okay, and then we will go, okay, so that wasn't right. So now let's look at the companies. I seem to have missed a few slides. All right. There we go, I've got a chair. Okay, so in the first quarter, or the last quarterly results, what we saw is, as I said, we had some companies such as Anglo American. Anglo American was one of the companies that last year its reports were like really, really dismal. And if you had to put it in relation or relative to the JSE, it was an underperformer. Now, this also puts in valuations such as the PE ratios, which are the price to earnings ratios, into sight. A company like Naspers that has global telecommunications and technology has been resilient because despite all the geopolitics, one sector that hasn't been impacted by the tariffs and also that has remained resilient because global governments have been one sector that they haven't cut back on in their government spending has been defense. So Naspers, which accounts for 13% of the JSE 40, continues to basically have pent up demand, and this continues to support the quarterly results. So Naspers is one of those that are showing characteristics of defensive stocks. As I said, another sector that has outperformed has been gold. And for gold prices, not only is that a hedge against inflation, but it's also a hedge against rising recession risks. So a company like Anglo American has, if you look at the PE ratio, it's actually below the 15 PE ratio that is the average for the stocks in the JSE. Now, why is this important? Because it means that the price at the moment is still undervalued. And these things contribute to the expected forecasts because you want a stock that analysts see as a outperformer, even though prices are still seen as undervalued. And this gives a lot of growth potential, obviously not only for the short term, but longer term. Now, these companies, what we also need to realize is if we see gold prices have been on an upward trajectory, they tested the 3,500 mark. So that accounts for about a over 30% increase just this year. And take into account the fact that even last year, gold prices were actually resilient. Companies like oil companies benefited from restrictions on energy production and oil, and this drove demand for renewable energies. And since Trump has basically said he wants to increase oil production, and so has OPEC, we've seen that there's been a lot of pressure on oil prices, and that's reflected in the valuations and also in even just the prices of companies like Sasol and Glencore and so forth. So if we're looking just specifics if we're looking at sectors, last year we saw growth stocks that have been really resilient. And now we're seeing defensive and consumer staples that are coming into play. And generally, this is reflective of changes in economic forecasts and in the global dynamic. Why is this important? Because over the next few years, Trump is going to be president for 4 years, and well, we'll see what happens. But this is important because we have to see that the broader, the long-term prospects of growth for these stocks has changed. So even though last year we saw certain stocks that were really outperforming and had potential while the growth forecasts were really good, now we've seen a lot of those companies under pressure, as well as with tariffs, such as with pharmaceuticals, 25% on a company like Aspen that has that globally is quite a big importer or exporter to the US, that is going to increase its production costs and just the demand for those shares. And though, if we look at a company like Capitec in financials, FirstRand and Standard Bank have a large global exposure. And those underperformed in the last quarter, whereas Capitec was a real outperformer. So now analyst forecasts are now looking more at a company like Capitec that has like local resiliency and is not really that exposed to the US for the growth forecasts. And these are important, as I said, it goes beyond valuations. But then we still see that some companies have dividends that have still been contributing. So that gives additional income. So if we look at just the global and more the African landscape in 2025, these are important considerations to take into account. Other things that we need to account for is things like liquidity ratios, because we need to know that even if these companies are facing increases in production costs and everything like that, we need to know that they can still sustain their debt to liquidity ratios. So if you have unforeseeable circumstances or events, you want to know that the company is going to, be able to actually get through that. And a lot of companies, especially in the energy and oil sector, are now showing those cracks. And a company like Anglo Platinum, with diminishing platinum prices, or those prices have been decreasing, we see that those companies are now showing signs of cracks. And this isn't really good if you are investing it in a long term. You don't want a company that could potentially go in the same direction as Steinhoff. You want to know that your portfolio is protected and that you can still actually achieve alpha going forward. So with regards to PE ratios and with regards to earnings, as I said, the potential, okay, let me just shift here. So companies that are really, really showing positive results include, as I said, AngloGold Ashanti has been an outperformer. We do see that Capitec, once again, Clicks. We saw Richmond taking a bit because it's in the luxury sector. This company has taken a bit of strain. But for example, AngloGold reported the prices were up roughly over 80% in the first quarter. So this shows that earnings have still been really strong. And this also shows the global dynamic has been supportive of the sector, and analysts are still really optimistic about the future prospects of growth. A company like Glencore has really, really suffered. Other companies like Goldfields and even MTN. MTN has been increasing its exposure in Africa and is actually coming out as an outperformer, as well as we do have other companies like ShopRite. ShopRite, despite global uncertainty and so forth, consumer staples, everybody is still going to need to buy their groceries and so forth. So these companies have a tendency to remain resilient, and this pens up demand for these stocks and valuations, which I think the next quarter, when we actually look at the next quarterly results, we are going to see the impact of the broader tariff risks that are now going to be priced into markets. But what I also wanted to state is that even though these earnings and all of that are really, really important, it's also the forecasts. So after the earnings reports, analysts give, or the CEOs will give their forecasts on the potential risks and challenges that the industry as a whole and the company are facing. And if we see a company like NVIDIA with global exposure, and that has really been climbing, we see that it's actually not really the earnings that move the stock prices, it's the forecast. So, especially with the next earnings, yes, I do think the last quarter earnings are obviously important, but I think the next earnings are going to be critical in determining what the growth prospects are for those companies for the remainder of the year. So, as I said, unfortunately, we've had a limited amount of time. What I will do, so my Twitter handle, and this wasn't actually planned, but it's going to be at TAM707. What I will be doing is after this and over the weekend, I will be putting in an in-depth presentation, and I will also be putting in a bit more analysis on the individual stocks, as well as some regression analysis, stats, and economic projections. So please feel free. You can also just look that up, and then you can have a bit more insight. As I said, then I can go into a bit more details on the sectors and the industries, as well as the valuations. Okay, I've got 1 minute left. So are there any questions? Yes?
I have something from you. Hey, my man.
Okay, so with regards to new companies, there are companies that I've been looking at that aren't necessarily part of the JSE Top 40 yet, because they are still up and coming, but companies that are now investing in especially rare earth minerals. Africa is rich in rare earth minerals, and this is important because it's a key component for a lot of AI, for chips, for technology, and for defense. So a lot of those companies we see are up and coming, And in the last quarter, we saw over 1,000% increases in the prices. So those companies are definitely, if we look at the broader index, such as ALSI, if looking at companies that are top performers there are actually really, really good because, as I said, JSE top 40 companies are already established. Those blue chips do perform well during times of economic uncertainty. But if you're looking at potential growth prospects, personally, I'm looking at a lot of those rare earth minerals. They're also not exposed to tariffs. So there is more of a potential for, especially the short-term growth potential is really, really high. Cool. Yeah. Okay, thanks, guys. Thanks for your time.